Thank you, ladies and gentlemen. Thank you, Jerry. Thanks to RIU for putting on this conference and to the Kamara Group for sponsoring this session. It's been look forward to the opportunity of giving you some background about what Potash West is doing. We've got a number of projects, but our main flagship is the Dandaragan Trough green sand deposit. I'll skip along pretty quickly, so I won't be able to focus in too much detail. We're in booth 30 if you'd like a more detailed explanation of some of the issues. The disclaimer, as has been said before, it's very important that you take your own advice on these projects. What I'm talking about now is what we've done in the past. It's covered by releases, but there are future statements, so take your own advice. Go through the company very quickly, talk about the fertilizer industry. Then our two major projects, the Dandaragan Trough in Western Australia and the South Harz project in Germany, and then the value proposition for Potash West. We've been listed for about 5 years now, got a market capitalisation at the moment of about $8 million. Management and directors still hold about 12% of the company, and the top 20 hold about 50%. And what we're focused very much on is creating value in the fertiliser industry with two large projects in areas of low sovereign risk and good infrastructure in regions of the world that are importing their fertiliser needs. Couple of slides about the fertiliser industry. Driven by demographics very strongly. World population forecast to grow from about 7 billion people now to somewhere between 9.5 and 10.5 billion by 2050. So more than 30% increase. Arable land won't increase at the same rate, so it's going to go from about 1/4 of a hectare per person to 0.15. Add to that the demographic changes in the developing world, and if they behave the same way as OECD countries have, as the GDP per person becomes higher, they will eat more meat. That puts a lot more pressure on agriculture. Most of the agricultural experts talk about a requirement of 2 to 3 times as much food being required to be produced by 2050 as we do now. There are a number of ways of achieving that goal, but one of the low-hanging fruit is to increase the use of fertiliser around the world. There are 3 elements. You need hundreds of kilograms per hectare for plants to grow as effectively as possible. Nitrogen, phosphorus and potassium. If you go down to your local plant shop, NP and K, and different plants need different amounts of NP and K, and different soils have different deficiencies of that. They're not interchangeable. You need the right amount of each one to get maximum effectiveness. And these photographs here show what happens if you don't have phosphate and what happens if you don't have potash. Phosphate is very much required for green leafy growth, so pasture is very important phosphate. Potassium is important for fruits. So to get good yields of wheat, bananas, corn, whatever, you need potassium. It's a big business, forecasted about $170 billion last year, of which the 2 commodities we're interested in, phosphates and potash, were about 30 and 20%. So phosphates about $50 billion a year, and potash about 30. The world's production of phosphate and its consumption at first glance looks fairly well balanced. Phosphate's produced in over 50 countries around the world, but the majority of what's internationally traded comes from either Morocco or Saudi. They account for about 60 to 70% of the world's internationally traded phosphates. And Morocco is the Saudi of the phosphate industry. About 70% of the world's phosphate reserves are within Morocco. In our region, Eastern Australia, nearly fully supplied but does import phosphates. Its major producer is Duchess Hill for Incitec Pivot. Western Australia, Indonesia, Malaysia, mostly Thailand and India import all of their phosphate needs. So there's a big deficiency all through this region of Southeast Asia. Phosphate pricing has generally held up a lot better than some of the other commodities, and I guess that's a function of agriculture rather than infrastructure building or indeed consumption. So here's a range of bulks and oils, and that's rock phosphate, and that's single superphosphate, which is one of the products we'd be looking at producing in Dandaragan. And for potash, the bulk commodity that accounts for about 80% of the world's potash production is MOP, produced in, or 85% of it's produced in 2 locations in the world, Western Canada and Eastern Europe. There's been a marketing war going on in that industry or that sector for about the last 3 years, and the price has followed that down as Uralkali, the world's biggest producer, has expanded production to gain market share. The SOP commodity, it's a specialised niche, I guess. It's about 15% of the potash market. That's what we'd be producing in Dandaragan. Has stayed strong. That price has gone up now over €500 per tonne from a base of about 400. So with that as the backdrop, our first project, what we started looking at about 5 years ago now, is the Dandaragan Trough greensand deposit. This green area is the Dandaragan Trough. It's a sedimentary basin laid down about 60 million years ago. Starts about 50 kilometres north of Perth and continues on for about 150 kilometres. Most of the areas we've drilled have intersected good thicknesses of greensand, so there's a very large resource there. It's a great location in terms of what are still pretty low-value commodities. You've got a multi-user rail line running up the eastern side and a high-voltage power line. Gas along the western side. There's water underneath. There's small country towns. There's highways, roads. So all the infrastructure you need to develop a project are in place already. Our first resource is up here in Dinner Hill, which is less than 200 kilometres from Geraldton or Kwinana, which are the 2 bulk export ports and also the 2 locations of fertilizer plants in this region. This is the northern part of that basin, and this area here is Dinner Hill. There's a prospective area of about 60 square kilometres. We've drilled out less than 20, and we've got a resource of about 250 million tonnes that will last a significant period of time at the scales we're currently looking at operating. This shows you what the material's like. On the right-hand side here, there is a graphic of the geological sequence, and this photograph shows a drill hole from the surface to the bottom. There's 2 layers of greensand, Poison Hill and Molecap, separated by some chalk. And in and around the chalk, there's phosphate nodules. Physically on this sample, here's the surface cover of about 10 metres, and then about 50 metres of Poison Hill material, most of which has been oxidised. And when it's oxidised, the potassium is washed away, so the potash is depleted. There's the fresh material there, and then the chalk. And you can see here the phosphate nodules that we're exploiting for phosphate. So we have 2 geological resources that actually overlap in the same sequence: phosphate and potash. Our first project, stage 1, is using very well-known conventional technology to extract these phosphate nodules, wash them out of the matrix, produce a low-grade concentrate that then goes on to a conventional rock phosphate grinding and flotation plant. produce a rock phosphate, which is commodity grade of about 30% P2O5, upgrade or mix that then with sulfuric acid to make single superphosphate. That's got a usage where you're developing pasture or opening up new ground for agriculture. We've done a scoping study externally with Strategic Metallurgy, Bateman Engineering and Integer Research for marketing on these parameters. And that's got these sort of numbers. So the margin per tonne of single super produced is about $130. So an EBITDA of about $52 million a year. Capital cost to get started about $200 million. The NPV of that project is about 378, IRR of about 20. Importantly though, the mine life is over 60 years on that small footprint at Dinner Hill. Stage 2 is attacking the potassium silicate material using new technology called K-Max, which is basically leaching with hot sulfuric acid and producing not just SOP but also alum, phosphoric acid and other products. The revenue mix from that is 40% for phosphate fertilizers, 30% for potash and about 25% for alum that's used for water purification. That's got a capex requirement of about $600 million, a strong EBITDA generating over $250 million a year of free cash, and a good IRR. But right now that's the second stage, and we'll be looking to develop that post the phosphate project. Along the way of developing that K-Max process, we also ended up with some ownership of lithium technology. So we own 13% of this company, Lepidico, which is in the process of being sold to Platypus Minerals. We'll end up with about 5 to 6% of Platypus post that transaction, which is taking place over the next 2 months. Here's our development timelines. I won't dwell on this. The feasibility study for the phosphate project will take about 2 years, mainly in terms of permitting. We're working with a company, FTI Consulting, at the moment to see if there's interest from joint venture partners coming in here to accelerate that work and bring the construction forward. Probably know how that goes over the next 6 months. And in terms of a standalone company, the free cash from the phosphate project will allow us to develop the K-Max. Our second project is in central Germany, where we own 55% of a brownfields potash exploration project. The counterparties are private interests in Australia. This is a close-up of that area, the South Harz region of central Germany in the province of Thuringia, which was part of the Soviet GDR. Because of, I guess, that background, since the mid-1990s, this area has been neglected as a potash-producing area. There's still 2 mines operating there, and there is a large number of holes drilled for potash on our 2 exploration licences. We've got an exploration target of 4 to 5 billion tonnes on Kulstead alone, and drilling two twin holes on that should give us an inferred resource of a significant tonnage. That's planned to be done over the next 12 months and is being done by an IPO. We're vending the assets into Davenport Resources, which is a public unlisted company. They're raising $5 million, which will take place in June and July this year. When that's completed, Potash West will own about 29% of that company, plus have some upside performance shares as well. Potash West shareholders will have a priority entitlement at that IPO. So Potash West now has, I guess, 3 major assets, and we're securitising the German assets within East Exploration via Davenport Resources in their IPO. And the technology, we're securitising the lithium technology into Platypus Minerals. The Dinner Hill project contains the bulk of our resources at the moment in the Dandaragan Trough, and we're actively going forward on the pre-feasibility study for that, but we're also looking for joint venture partners to accelerate that work. Our peers, this group here, none of these are in production, so their market valuation is all based on the quality or the market perception of the quality of their assets. Here's Potash West down at about bit under $10 million. I won't go into all of these. There's a range of them. RIU Resources has ASX listed. Its flagship project, though, is a phosphate project in Brazil, producing single superphosphate for the local market. So it's a very similar scale as our Stage 1 project. And Highfield Resources, about 4 years ago, the decommissioned potash mine in northern Spain was vended into Highfield Resources. At that time, it had no JORC resources on it. So they, like us, they twinned some holes that were already there, established inferred resource fairly quickly, and over the next 3 or 4 years went through indicated and feasibility study. So their market cap went from about 20 million to well over a billion, $750 million, and they raised about 200 million at $1.80. So they've been a very successful story, and the appetite for European potash is still there. So the Potash West story is very much about fertilisers in areas where there is good logistics that gets the product to the customers, and in regions that are importing the phosphate and potash, their phosphate and potash requirements, and areas that have low sovereign risk. In the Dandaragan Trough, we've got a very low risk start-up with the phosphate, which is cash flow positive, but the blue sky of the KMAX process producing potash, and it'll be a very large project once it gets up and running. In Germany, there's a significant exploration target there already, and drilling should get us to an inferred resource fairly quickly. Potash West, though, will enjoy the upside of that success in Germany with performance shares, but we won't have any liability to fund any further expenditure. And we have IP, both within lithium and also the potassium extraction that can be applied to other glauconite deposits around the world. So thank you for your attention. As I say, we'll be in booth 30 if you have any questions. I think we've got a bit of time, Jerry, if you want to field one now.
If you do, anybody got any questions for Patrick?